Cisco just delivered the kind of earnings report investors are supposed to celebrate. Revenue beat expectations, adjusted earnings beat expectations, AI infrastructure orders hit $9.3 billion for the year, and management guided fiscal 2027 revenue above Wall Street estimates. Then the stock fell about 9%. Wall Street got the good news it asked for, then immediately checked the receipt. The headline numbers were genuinely strong. Fiscal fourth quarter revenue reached $17.25 billion, up about 18% from a year earlier, while adjusted earnings came in at $1.22 per share. Cisco also booked $4 billion of AI infrastructure orders in the quarter alone, bringing the full-year total to $9.3 billion. So this was not an AI demand collapse story. Cisco basically showed up with a trophy case. Investors looked at the profit margin and asked for the return policy. That is where the contradiction starts to make sense. Cisco's non-GAAP gross margin was 66.3%, down from 68.4% a year earlier. For the new quarter, management guided gross margin to 65% to 66%, slightly below the roughly 66.1% Wall Street estimate cited by Reuters. The company is selling more hardware into the AI build-out, and that mix, along with higher component costs, can pressure margins. The AI supercycle may be real, but apparently it still comes with a parts bill. The other issue was expectations. Cisco shares had already risen more than 60% in 2026 before the report. When a stock has run that far, strong results can stop being enough. Investors start paying for the gap between great and even better. It is the straight A student problem. Once the market prices in perfection, an A can trade like a C. That does not mean Cisco's AI story is broken. Management expects about $7.5 billion of AI infrastructure revenue in fiscal 2027, and its full-year revenue forecast of $72.2 billion to $73.4 billion came in above consensus. The cleaner interpretation is that growth is being rewarded only if investors believe the economics can keep up with it. So the next thing to watch is not whether Cisco can say AI one more time. Watch the margin trend, the conversion of those orders into revenue, and whether the stock can stabilize after the reset in expectations. The earnings trophy is still on the table. For now, Wall Street is reading the receipt.